system of accounting. If they mention cash system of accounting, then slightly you have to do it separately. Slight differentiation is there between cash system and mercantile system. Okay, so we move on to next slide. Now, in business, what happens? You buy so many assets like land, building, machinery, plant, furniture. Then, after using for several years, you will sell those assets. Okay, for that assets, you have to calculate depreciation. You know what depreciation? You will done one chapter in the first year, FA1. I need not discuss. Again, I'll read it. Depreciation means loss or decline in value which occurs gradually over useful life of a material thing due to physical wear and tear and decay, and is generally limited to losses or decline in value and cannot be restored by current repairs and maintenance. Now, what are conditions for claiming depreciation? You can claim depreciation in income tax under the heading profits and gains from business and profession. The condition is asset should be belong to the SSC or should be belong to the owner or taxpayer. And that property, that asset should be used for the purpose of business or profession. If it is used for personal purpose, depreciation cannot be claimed. Okay? If it is used for personal purpose, depreciation cannot be claimed. Then it should be used during the relevant previous year. Previous year is 1920. It should be used in the last year. Okay, depreciation is available on tangible as well as intangible assets. But for goodwill, especially for goodwill, no depreciation is allowed in case of goodwill. This we'll discuss slowly one by one. We have to cover a lot of theory part. Lot of conditions are there in this chapter. Now we have a block of assets called different blocks are there and different depreciation rates are mentioned. Will come to know that. The block of assets means a group of assets falling within the class of assets comprising tangible assets being building, machinery, plant or furniture. And next is intangible assets being know-how, patents, copyright, trademark, license, franchises, or any other business or commercial rights of the similar nature. In respect of the same percentage of depreciation prescribed. They prescribe the rates of depreciation on based on different blocks, based on purpose of use. Okay, based on purpose of use, based on different blocks, based on for business use, for industrial use. They're classified as tangible and intangible assets. In tangible, we classify building, machinery, plant, furniture, and some other assets are there. Intangible, we classify into know-how, patents, copyright, trademark, license, etc. But on goodwill, depreciation cannot be calculated according to the income tax act. Now, these are important rules you have to follow while giving expenditure as deduction in profits and gains from business and profession. These rules you have to follow strictly. When you have to give a deduction as business expenditure, the first one, the expenditure should be revenue in nature. You know what is revenue expenditure? What is capital expenditure? Revenue expenditure we spend every time. Capital expenditure only once in a time we spend it. Okay, the expenditure incurred should be for the business purpose only. If it's for personal purpose, that is not allowed. That deduction is not allowed, and it should not be used for personal purpose. And also, it should not be prohibited under any law, and it should not be against the public policy. For example, to do the work, to undertake the work done from the government authorities, you are given a bribe to the government officials. When you write in the accounts, bribe charges. Suppose you write expenses side, bribe charges. That is not allowed. That is not allowed because giving bribe or taking bribe is against the public policy. That is not called business expenditure. Okay, the expenditure should be related to the relevant previous year for the current assessment. Current assessment at 2021, previous year 1920. The expenditure should be last year. The expenses should be belongs to last year. Now, the deductions can be given if it is related to the business for which income is computed. So, it should be all the expenses concerned with the business should be for the business purpose only, not for personal use. Okay, these are important rules, golden rules to be followed while giving expenditure as deduction. Now we will discuss about what are the so many business expenses are there. You have to be study one by one in detail. N number of business expenses are there. Okay, never ending. And you find this topic a little bit frustrating because a lot of theory part, a lot of business expenses that can be subtracted. You have to study a lot of things. Now we'll discuss what are the expenses which can be deducted. But there are some conditions also. Now, the first one, we'll discuss one by one. Deductions in computing the business income under section 30. First, rent of the building. Okay, rent of the building. If you are doing business in rented building, what happens? First, rent paid. Suppose you paid the rent, that is allowed as deduction. Whatever the rent paid, that is allowed as deduction. Next, second is rent payable. Allowed as deduction if the business maintain mercantile method of accounting. If the business maintains mercantile method of accounting. If the problem, if they says that the business is maintaining cash system of accounting, in that case, rent payable is not allowed as deduction. Please remember, you'll forget sometimes. Okay? In the problem, nothing is mentioned. You have to assume that the business is maintaining mercantile system of accounting. If they mention that the business follows cash system of accounting, if rent payable is there, that is not allowed as deduction. Okay? If the business follows mercantile system of accounting, only in that case, rent payable is allowed as business expenditure or it is allowed as deduction. Okay. Now, third, rent deposit or advance rent. Suppose you have given advance rent, that is not allowed as deduction. You have deposited rent in his account or you given advance rent, that is not allowed as deduction. Next, fluctuating rent. Rent will change every month or every 3 months. That is not allowed as deduction. Rent remains fixed for a year. Sometimes what happens? Every month rent will change. In some cases, that is called the fluctuating rent. That is not allowed as deduction. Now, next, what happened? Property sublet. You've taken a huge building for your business purpose. In that building, we have 10 rooms, let us say. 10 madgis. But you need only 6 madgis, 6 rooms. What is the extra one? You will sublet to other people. In that case, what you have to do? Whatever you received rent from subletting, whatever you are paying, that net rent should be allowed as deduction. That means net rent payable is allowed as deductions. That means sometimes what happens, if rent received is more than rent payable, then it is treated as income from other sources. If rent received is more than rent payable, it will be treated as income from other sources. That means you should ignore that. If rent payable is more than rent received, the difference is called net rent payable. That value is allowed as deduction if the property is sublet. Okay, suppose we have huge building, we don't want so many rooms, we give 2 rooms to some other party. Okay, so that party will give us rent and we are paying rent to the owner. Okay, so if rent payable is more than rent received, that value will be allowed as deduction. Suppose the reverse case, rent received is more than rent payable, that different surplus amount is treated as income from other sources. This is in case of the rent of the building. Okay, rent paid, immediately you can allow deduction. Rent payable, if they follow mercantile system, allow deduction. If not, if they follow other cash system, not allowed. Rent deposit, advance rent, not allowed. Fluctuating rent, not allowed. If property is sublet to other party, net rent is payable. or you're getting a surplus, it should be treated as income from other sources. That means surplus should be ignored. In the profits and gains from business and profession, this is the first expenditure or first deduction. Second deduction, repairs to building. You have to do some repairs to building. Okay, you have to maintain the building in good condition. Now, first is you're making repairs to own building. Suppose you're doing business in your own building, it is allowed as deduction. It is allowed. Okay. But if you're doing repairs to rented building, it is allowed as deduction subject to if there is an agreement to do so. That means if there is an agreement between the owner and tenant, in the agreement it is stated that the tenant can undertake repairs to the building. In that cases, it is allowed deduction. But there is no agreement, not allowed at deduction. That means deduction cannot be allowed. In the problem, nothing is mentioned. Nothing is mentioned. By default, you have to treat as there is an agreement. There is an agreement for the tenant to make repairs to rented building. Nothing is mentioned. If they mention there is no agreement, then it should not be allowed as deduction. Okay, in case of repairs to building. Own building, anyhow, you will straight away give as deduction. But rented building, if there is an agreement, you can allow deduction. But there is no agreement, not allowed as deduction. Okay? By default, nothing is mentioned. You have to treat as, assume as, there is an agreement. If there is an agreement, you can allow as deduction. You will forget a little bit by doing the problems. Again, revise it. Don't worry about that. Types of repairs. This is huge thing. Types of repairs. Where different types of repairs are there. Okay. First type of repairs. Current repairs or general repairs. Okay. Well, small types of repairs you are undertaking for your building. Okay. Suppose you are undertaking current repairs or general repairs for own building and rented building. It may be own building or rented building. Straight away you can allow as deduction from the income. Okay. Straight away you can treat as business expenditure or you can give deduction. You can claim deduction for own building and rental building in case of current repairs or general repairs. Okay. Suppose if it is a capital repairs or special repairs or specific repairs. Suppose you are repairing a particular house with marble stones. You want to have a good floor, marble floors. That is called capital repairs. For rented building, allowed as deduction. If it's rented building, allowed a deduction. But for own building, not allowed as deduction. For own building. But whatever you are making capital repairs, that will be added to block of assets and depreciation can be claimed. Okay. Suppose you are repairing your room, you are laying new marble floors, new designs. So that can be added to block of assets and you can claim depreciation. If your own building, rented building, you can allow as deduction for capital repairs or special or specific repairs. Now, for capital expenditure, you are constructing a new floor, second floor. You are having only single floor. You are constructing first floor and second floor. That is called capital expenditure. For own building, not allowed deduction, but added to block of assets and depreciation can. So, whenever you are constructing first floor or second floor for your own building, that cannot be allowed deduction, but it should be added to block of assets and depreciation can be claimed. You can claim depreciation. For rented building, not allowed as deduction, but SSC or tenant can claim depreciation. If it is rented building, it is not allowed deduction, but SSC or tenant can claim depreciation. This is in case of capital expenditure. Okay, so be clear. Types of repairs, there are three types: current repairs, capital repairs, and capital expenditure. Okay, for current repairs for own building, rented building, you can allow as deduction. For capital repairs, is for rented building, allowed deduction, but for own building, not allowed a deduction. For capital expenditure, not allowed a deduction, but that expenditure can be added to block of assets and depreciation can be claimed. These are the three different types of repairs. Now, next is rent taxes of building. Okay, own building or rented building. It is allowed a deduction if the due amount is paid on or before the due date of filing the return. Okay, before filing the return, income tax return, you have to pay the amount for rent taxes or building, rent taxes of building. Before filing the return, if you pay the amount, then it is allowed a deduction. If you do not pay on the due date of filing, you do not pay, that is not allowed a reduction. Remember, suppose the due date of filing return is, let us say, June 30th. On June 30th, you are not paid rent taxes. You paid in July. That is not allowed a deduction. If you pay before June 30th, the amount is paid, then only that deductions can be allowed. That is in case of rent and taxes of building. Okay? So you have to pay the amount before filing the return, before the due date of filing the return. If it is paid after due date, that is not allowed. Thus, deduction is not allowed. Okay? Next. Insurance of building. Allowed a deduction, even it is paid by owner tenant. Okay? Straight away I can say, whoever pays, whether paid by the owner or paid to tenant, insurance is allowed as deductions, or it can be treated as business expenditure. Next, insurance of plant, machinery, and other assets. Any case means if it is paid by the owner or tenant, it is allowed deductions. Next, health insurance of the employees. In your business, suppose you are doing any business, you will be having some employees. For them, you have taken health insurance and you are paying the premium. And you pay the premium, if you pay the premium through checks, through check only, then that is allowed as deduction, provided it is approved by IRDA. What is IRDA? Is a development authority, insurance regulation development authority. Okay, if it's approved by IRDA and if the employer pays the health insurance premium of employee through check, not through cash. Remember, if it is through cash, that is disallowed. That is disallowed. Only through checks, if the premium is paid by the employer or the employee, that is allowed. Okay, that is allowed as deduction. Next, interest on borrowing. And if you borrow the loan for business purpose and you're paying interest, maybe for profession or for business, it is allowed a deduction. Suppose you're borrowing interest for your personal purpose, that interest is not treated as business expenditure, or that is disallowed. Only that amount is used for business purpose. In that case only, the interest can be claimed as deduction. Personal use, no. You cannot allow deductions on interest payment. Okay, this is over. Now, next is repairs to plant and machinery. Okay, we have three types of repairs: current repairs or general repairs, specific of capital repairs, capital expenditure. What is general current repairs? You have to maintain the machine. You have to do some servicing part. That's general or current repairs. What is specific for capital repairs? Replacement of small parts or replacement of spare parts of machine or equipment. That is called the specific capital repairs. What is capital expenditure? Completely buying a new machine. Okay, selling your old machine, completely buying a new machine is called capital expenditure. Okay. Now, again, if it is a general or current repairs, if it is your own machine or hired machine, sometimes what happens in the business, either use your own machine or you take from others equipments or rental basis, hired machine. In both the cases, if it is general or current repairs, that is allowed as deduction. Maybe it is own machines or you're taking machine on hire basis or rental basis. In both the cases, the deductions can be allowed. That means we can treat as business expenditure. Now, if it is specific or capital repairs, if it is own machine, if it is a own machine, it is not allowed as deductions, but it can be added to relevant block of assets and depreciation can be claimed. You can add to block of assets, you can claim depreciations. Okay. For hired machine, not allowed a deduction. You cannot claim as business expenditure or deduction cannot be allowed in case of hired machine. This is second category, repairs. Okay. Capital repairs or specific repairs. Now, in case of capital expenditure, in case of own machinery, not allowed as reduction, but added to relevant block of assets and depreciation can be claimed. We'll understand only while doing the problems here. Okay, so we cannot treat as business expenditure, but that value should be added to that value can be added to block of assets and depreciation can be claimed. If it is a hired machine, not allowed as deduction. Okay, it's hired machine, not allowed as deduction. So this you keep in mind. In case of repairs and repairs to plant and machinery, in three different types of repairs, we have own machine, hired machine. Same, own machine, hired machine. And in case of specific or capital repairs, what you have to do? Own machine. Should be allowed? No. For hired machine, no. For capital expenditure, own machine, hired machine, not allowed as deduction. But for current repairs or general repairs, both the cases, own and hired machine, you can allow as deduction. This is the repairs to plant and machinery. Okay, all this will be posted in the Moodle. You can have a check on this. Okay, now I'll share one more different types of business expenditure. Next expenditure, remuneration to staff. You might have employed your staff, you have to pay salary, bonus, commission, or different types of in cash or in kind. You have to make payment to the employees. Now, salary, allowances, bonus, perquisites. Perquisites means maybe in cash or in kind. Any amount paid by the employer to employee in cash or in kind, that is called perquisites. For example, employer will provide you a car for traveling to and from work to office, home to office, office to home. That is called perquisites. Commission paid to employee is allowed a deduction. All these are allowed a deduction. Okay. Next, expenditure on welfare schemes to employees is also allowed deductions. Sometimes they may conduct a party or some tour to other places, and the employer has spent some amount on that. That can be allowed as deduction. Now, salary is allowed a deduction on due basis. Suppose you are not paid the salary, you have to pay. Still that is allowed as deduction. Salary payable or outstanding salary, still that is allowed as deduction. Next, perquisites, that means any benefit given to employee either in cash or kind is called perquisites. Provided both monetary and non-monetary will be allowed a deduction. It is allowed. Or the perquisites provided by the employer to the employee will be allowed. Maybe including monetary, non-monetary. Monetary in the form of cash, non-monetary in the form of kind. Now, income tax paid on non-monetary purposes is not allowed deduction. Sometimes employer may pay tax on behalf of employee on the non-monetary purposes. That is not allowed as deduction. Non-monetary purposes means your employer is providing a car and the expenses of car are given by the employer. Non-monetary purposes. Okay, this is what the remuneration to staff. Okay, so these are 5 categories: salary, allowances, bonus, perquisites, commission paid is allowed at deduction. And you are spending any amount on the welfare schemes allowed as deduction, including salaries outstanding, not paid, still it is allowed as deduction. Also, both monetary and non-monetary perquisites are allowed as deduction. But income tax paid on those perquisites is not allowed as deduction. No. Next is contribution to provident fund. What is provident fund? If you join any company, any organization, you have to contribute in a salary some percentage of amount, and the same percentage should be contributed by the employer. Both clubbed together, they will be deposited in the employees provident fund scheme managed by the central government, and after your retirement, you will get that amount plus interest. That is called provident fund. Now there are 2 types of provident fund: superannuation fund and normal provident fund. Okay, in case of now in the provident fund, employer has to contribute, employee has to contribute. Suppose it is 10%. 10% of salary should be given by the employee, and 10% salary will should be given by the employer from the employee's pocket. Now, if there is employer contribution, it is allowed deduction if the contribution is made towards RPF, recognized provident fund recognized by the government of India, or approved superannuation fund. Okay, both should be recognized by the government of India. If the employer makes contribution, that is treated as business expenditure, or that is allowed as deduction. Okay, employer contribution. Now, employer contribution, what happens? Now, what we'll do? We cut the salary, 10% of salary from the employee. Suppose the employer failed to deposit the amount. What happens when the employee contribution receives? Simply receive the employee contribution. You are not deposited. That should be treated as business income. Okay. But when the second case, when the employee contribution is deposited before due date, it is allowed as deduction. Okay. Before due date, if you deposit with EPF managed by central government, that is allowed as deduction. And sometimes if employer fails to deposit and they delay in depositing or not yet credited in that EPF account, it is not allowed as deduction. This is the thing you have to allow as which should be allowed, which should not be allowed in case of provident fund. Employer contribution, it is allowed if we contribute to approved fund or recognized provident fund or approved superannuation fund. If it is employee contribution, simply receives employee contribution, he will not deposit. In that case, it is known as classified as business income. Suppose if deposit before the due date, it is allowed as deduction or it is treated as business expenditure. And if it delays in depositing the amount in EPF account, then that is not allowed as deduction. This is in case of provident fund. Now, next is bad debts. You know what is bad debts here? It is allowed as deduction subject to certain conditions. You know what is bad debts? You have done a lot of problems in bad debts. Now, what is the first condition? The debt has been taken into account while computing the income either in the relevant previous year or in the preceding previous year. That means we'll take the bad debts of maybe last year or before the last year. First condition. You can take it last year, previous year, or before the previous year. Now, credit sale must be incidental to the business. That means you have to sell, when you're selling, making a sales, the credit sale should be related to the business, not related to personal use. Third, the SSC has made all efforts to recover the dues. That means simply with not sitting at the business office, you are not taken all the efforts to recover. It is not called the bad debts. That means the SSC has made all these steps. He has taken all these steps to recover the amount. Still, it has not recovered. That should be the condition. Next, the debt has been written off as bad debts in the books of accounts. In the books of accounts, that should be considered as a bad debts. Now, this is in these conditions, four conditions fulfilled that it is allowed as deduction. And the last condition, bad debts arising due to insolvency of a debtor for sale of an asset or lending money is not allowed as deduction. Suppose if you get a bad debts because of insolvency of a debtor, that is not allowed as deduction. See, the conditions you have to follow when allowing bad debts as deduction. That means if you want to treat bad debts as business expenditure, those conditions you have to follow. Otherwise, that condition is not followed. In that case, it cannot allow bad debts as deductions. That means that cannot be considered as business expenditure. This in case of bad debts. Next, expenditure on scientific research. Now we have a lot of big business. We have in-house scientific research. That means whenever the business is selling a product, they have to upgrade the product. They have to make modification of the product. For that, a different R&D department will be there. Research and development department will be there. Suppose if the research work is related to business of the SSC for claiming reduction, the expenses can be classified into two categories: revenue expenditure, capital expenditure. Revenue we spend every time. Capital we spend once in a while, once in 5 years or once in 10 years. Now, if it's a revenue expenditure, if that expenditure is on scientific research, in-house scientific research, and it should be related to the business of the SSC, this is a revenue expenditure. All revenue expenses are allowed as a deduction, like cost of materials, salaries, revenue expenses, all are allowed a deduction. Even it is incurred 3 years before the commencement of business. That means, even though it is incurred 3 years before the commencement of business, you can allow all those expenditure. If it is revenue expenditure. What is capital expenditure? It is allowed, except cost of land, other expenditure, other capital expenditure is allowed reduction. Okay. Same case. In the all the capital expenses incurred 3 years before the commencement of business are allowed as deduction in case of revenue expenditure and capital expenditure. Except cost of land, others are allowed as deduction. That means you can consider as business expenditure. That is expenditure incurred on in-house scientific research. Okay, that R&D department is for the business purpose only, not for the outsiders. Now, suppose next is if it is incurred towards if you contribute to outsiders not related to the business, what happens? So there are the conditions made. Okay, now we'll discuss. I stop now. Tomorrow we'll discuss this. So many things are there. Okay, so we'll stop here and take the attendance part. Everything is shared on the Moodle. Don't worry about that. Attendance, please.